morning, traders. Here we are on beautiful February 13th. This morning we're dealing with overextended bullish rally. Bullish trend inception in the markets played out on January 31st at Fibonacci reversal zone on February 7th and February 8th. This is overextended bullish rally today. This key Fibonacci retracement tool that can be installed on any platform, any instrument you choose to trade, showing to you not the place to buy. Look at this rally. Knowledgeable trader on standby for short, and knowledgeable trader knows extremely well. This is key support on S&P. By the time you come near, your trade is in profit. And you're moving your stop outside of break-even after taking most of your position off. This Fibonacci level had been identified days in advance, which is also twinned with oil chart that I will remind you next. So 5 is wiki, in addition to counter trend, yes? The wick is ending at decision point 1, yes? Everyone seeing what's happening with a counter trend push? Powerful reminder. This is to where price retraced right now. This is what we're discussing with students. That confirms this bearish pullback is a counter trend move. Market simply taking a pause. This bright pink line identifies the weakness of the sellers. Oil news in 20 minutes. Knowledgeable trader paying attention to oil charts. S&P is always impacted by oil news. To the downside on day trading chart, this is key support. To the upside on oil institutional chart, this is key resistance. If you choose to short the market, you know how crucial this level is. Pay attention to this moment. Counter trend move. Not the place to buy. The place to monitor for short. The only stopping ground left is this. This support is out, S&P in free fall. It's a beautiful, beautiful thing. With 2751 being key support. Key moment on S&P. Always please pay attention to 3 and please remember it's a counter trend move. We agree? 2752 is a pivot on 3. So here we go, traders. 2754.50 and 2751 is the most important place in the market that will identify the market for hours and potentially days to come. This is crucial support. This is counter trend move as we're discussing with students. And this is oil in 2016, rallied from trend inception reversal zone until key Fibonacci resistance. Weekly chart, hold time, weeks, months, and potential years. And this is oil next, 2 years later. Skyrocketed through, reaching 64. And eventually reaching reversal zone, where oil crashed from. What is the problem on oil now? Key Fibonacci resistance, 54 on weekly. Taking oil over a year to break through. 2017, key resistance now. 2016, drastically different number. Exact same strategy. And this is S&P now. Finally starts moving down. It's a beautiful, beautiful news. We knew extremely well this is not the place to buy. This is a place to exit long and monitor for short, just like oil had done. Agree? No surprise. Not the place to buy, the place to exit long and monitor for short. Chart present in the room for years. This is oil day trading chart. This is key trend inception on oil. This is proprietary Fibonacci tools that you can install on any platform you choose to trade that show you, no matter what the news is, when price comes to reversal zone, oil will rally. Trend inception, February 10th. Trend inception, January 28th, January 23rd, January 16th. Where is the trend reversal? End of January, February. What do we know? This will be a big problem on oil. Why? It's institutional resistance. It's not just day trading resistance. Famous 54 number. End of minor trend. Do you remember that? Present in the room for years. Buyers fully in charge on oil. Buyers stepped in from trend inception. And unlike on S&P, oil respected key support. Do not short. And this is where oil heading to next. And what oil will do at these levels is the key. Oil news in 10 minutes. We have no idea what the news will be. What we do know, Fibonacci levels will override any news, time and time again, because market Fibonacci puzzle. And if you know that, you can trade anything you choose, because price action remains the same, no matter what you trade. So, at the time of the news, I'm converting this chart to 1 minute. Fibonacci structure, Fibonacci levels, key trend support and trend reversal present in the room since early January, in a play right now in the middle of February. This is where price is heading to, and this is where pullbacks will be vicious and brutal. Just like on oil weekly. It's all the same. Not the place to buy, the place to exit. Here hold time, weeks, months, and years. Here hold time, minutes, seconds. Choice is yours, what you want to trade. Bullish rally overextended, taking a pause. This is a place you don't want to buy near. Institutional resistance in front of you. What would be spectacular bearish news will be such a gift to start seeing powerful selling pressure. Support 1, support 2. Beautiful place to buy 53, but only if rules are met. Rules are not met. Do not touch a trade. So, oil heading to exact same place where S&P is now. Correct? In the course you learn this is your key target. In the course you learn this is where you take the profits of the table and moving your stop outside of break-even. On S&P this is a level to the downside. On oil this is a level to the upside. Oil inventories plus 2 ME. Higher the number, more bearish the news, more negative the number, more bullish the news. Undersupply, bullish. Oversupply, bearish. Key support on oil. Bullish rally, taking a major pause. Day trading chart on oil looks exactly the same as oil weekly looked at the start of 2018. Take a look. Remember this? Before oil reached reversal zone. Key resistance becomes key support. Shock or not. Would love for oil to do exact same thing on little day trading chart on S&P. Identical strategy. What is the difference? Risk management and trade hold time. Students trade both 1, 2, 3, 4, 5, 6, 7, 10, 11 and weekly, monthly and yearly charts. Why not? Most traders are investors. Very few make it in day trading. Most can do investing. Day trading is ultimate psychological warfare. Mindset is everything. And if you see what Tom Brady of trading had done, bread, you're not surprised. Look at that. February slow months. 4 trades. Less than 10 hours per week. It's only week number 2. Not a problem. If you keep adding lot size and if you keep choosing quality trades. What is a lot size? 5 lots. 4 months performance. Started a year and a half ago. Was making $11 an hour before. If Brad can do it, so can anyone. Maximum work, 10 to 20 hours per week. Oil news in 6 minutes. So again, this is crucial Fibonacci trend levels that have been present in the trading room since early January. Oil news in 1 minute. We know extremely well that bullish rally overextended. We're absolutely expecting pullback on oil. Crucial support if oil collapsing to here, it's a gift, monitor for long, but one step at a time. This is key support and this is where we absolutely expecting very powerful bearish pullback because this is not just day trading reversal zone, this is institutional resistance. So here we go. Did we expect oil pulling back? Of course. Just like oil weekly had done, there is no surprises. Absolutely expected. So, let's take a look on oil news. Let's see what the news is. Pretty bearish news. Oversupply 3.6 versus 2. So, key support becoming key resistance on oil. Correct? This is crucial support right now. Next. First 5 minutes after oil news release, knowledgeable trader allows oil to settle down. Trader never, ever, ever trades into the news. So again, traders, do remember we discussed on S&P that this key support 27.51 is crucial, yes? So the bounce from key target until this key resistance. Price is heading higher. However, a knowledgeable trader knows this is a big, big problem that we've been dealing non-stop with this market this morning. Just like on oil weekly at 54. Identical Fibonacci level, very different strategy. So here we are, traders, 15 minutes after oil news on day trading chart that been present in front of you since early January. You're witnessing very powerful reminder. If you know where overextended bullish rally is, you never buy near. Did we expect powerful selling pressure just like on oil weekly? Of course. Not the place to buy, the place to exit. And again, if I convert this chart back down to hourly, what do you see? Clear reminder. Overextended bullish rally that started in early February. Not the place to buy, the place to exit. And if we're going back to S&P, what do we see? Bullish crawl is on. Another trade. Did we discuss or did we discuss? This is a pain. This is a problem. Boom. Next. To the downside this level, to the upside this level. All in advance. Never after the fact. What you decide to trade, absolutely up to you. Do you want to hold position for minutes, hours, days, weeks, months, and years? Do you want to trade pound, euro, Apple, Amazon, oil, gold, cryptocurrencies? Choice is yours. Every single student different account. Every single student trades different time frame. Choice is yours. What you want to trade. So here we go. Key moment on S&P. We discussed after sitting at key Fibonacci level for the last hour. There is no reason to babysit this, there is only reason to get out of the trade. Here's a short, moving to the downside. We're expecting this level to be out, we're expecting price to crash to this support. So, we discussed since early this morning. If you choose to buy this high, you're full of greed and ego. Brutal place to be. We discussed since early this morning that this 27.51 is strength support. If price will continue respecting this support, we have a problem. Market remains in correction. Agree? So here we go, traders. While we're waiting on S&P, let's take a look and see what's playing out on oil. Let's go back to 1 minute chart as we discussed since early this morning. Not the place to buy, the place to exit. Correct? Just like oil weekly. Fibonacci levels present in front of you for the last months in a place this morning on any chart you choose to day trade. And what oil will do next at key support is crucial. Just like S&P right now here. Moving further down and down and down we go. Just like oil weekly, just like oil hourly. It's all the same. What you decide to trade, absolutely up to you. Choice is yours. So here we go, trader scroll is on. 27.53.50 is key Fibonacci target, where a trader trades, takes profits off the table and moving the stop outside of break even. If price is crashing through this level, 27.51 is crucial, the most important level of today and potentially days to come. So is everyone clear on spectacular reminder where you do not want to buy? Yes? Boom, just like support on oil weekly, this support is out. What a beautiful thing. Trail incredibly closely. Trail outside 27.51. And in case you missed the discussions in the room this morning, let me remind you. This is the morning we started with. This is what we discussed. This is not the place to buy. Incredibly aggressive bullish trades all over the place. As we discussed, conservative trader who is interested in long-term success will not touch. We discussed that knowledgeable trader waiting and monitoring for short. 2 hours later, finally market selling off. You do not need many trades. What you need is knowledge. And if you understand price action and you know Fibonacci and you use this on time frame you can afford to trade, the skies are the limit. This chart on S&P again, in case you missed prior discussions, is identical to long-term oil chart. Again and again and again. Oil at the start of 2018. Fibonacci reversal zone in front of you. Oil starts crushing. And this is oil next. And this is oil next. And this is oil now. Strategy identical to what you see on S&P. This strategy is focus of mastery class every single Thursday. And this is hourly trend chart on S&P. No surprise. Not the place to buy. The place to monitor for short. You don't need many trades. You need a quality. As you saw, Brett posting in the room time and time again. Less than 20 hours per week. On average 10 per week. What if you traded one lot on this trade? What is 9 points on the trade? $450 on one lot, on 10 lots $4,500, on 20 lots $9,000. What is your account allowing you to trade? Maximum risk on every trade without margin, 1%. Day trading, the most aggressive way to trade. You want to trade conservatively, you trade larger time frames. It's a beautiful thing that S&P finally behaved. To summarize what our Tom Brady of trading had been saying, to summarize what I said, quality trades are not high in numbers. That's what 5% recognizes, who remains consistent long term. So, let's ask students their results. What did you do? Pretty please, could you post? So, shock or not, is it possible that price starts reversing? Of course. What is crucial to the upside? This key resistance, and if S&P is skyrocketing, it's a beautiful thing. Because what did we discuss? 27.51 is key support. What are the chances of that happening right now? Very, very small. However, knowledgeable trader knows when trade reaches reversal zone, expect reversal. Just like on oil, just like on S&P, just like on Apple, on Amazon, on Netflix, on IBM, on every single instrument you trade. Larger the time frame, more conservative your trade. Smaller the time frame, more powerful your reaction and execution must be. Most dangerous and most aggressive way to trade, day trade. only if you apply a sniper's mentality, only if you can place a trade in a matter of seconds, you will succeed. Day trading not your cup of tea. Use everything you learn in the course on long-term investment positions. Everyone clear how crucial this resistance is on this bullish pullback? Price is crashing just like oil. Price cannot break through this resistance. It is worthless bullish pullback. And before we close out for the day, let's take a look on oil and what price action did. As spelled out again. Charts are twins with S&P, and if I convert this chart to 15, identical price action remains, identical Fibonacci levels. Not the place to buy, the place to monitor for short. Agree? Charts are twins. With oil weekly, S&P weekly, S&P hourly, any chart you choose to trade. So again in front of you, once again, crucial reminder why I named this Fibonacci level reversal zone. Again, S&P been stuck at this level for the last 12 minutes. What S&P will do at this trend reversal is crucial. 27.50 blocking bullish push. Agree? We know extremely well that when price correlates with key support, not the place to short near, the place to exit your short. And it will be a beautiful, beautiful thing if price will finally break through. If not, market is stuck in major pause again at bearish trend exhaustion. Nothing else is possible, and price can fall asleep for a long time. This is where you exit your short, not entering your short. And this is where you monitor for reversal. Exact same thing as Apple had done. Anyone surprised? Look at that. Shock or not, chart present in front of you for years. Apple sold off from here and rallied from here. But if I would bring up chart for you from years prior, you would be shocked to see all of these levels being identified months and years in advance. Shock or not, this is what Apple looked like at the start of 2018 when Apple doubled from key support to key resistance despite worst earnings in 13 years when Apple was at 91. What is in front of you after key resistance? 214 level. My goodness, what is Apple doing when Apple reaches this level? Shock or not? Almost a year later. What is key support? Just like key resistance on S&P right now. Did Apple crash? Of course. What a beautiful thing if you're paying attention to price, not indicators. Where is Apple rallying from? Trend inception, where Apple had been in 2017. This chart can be used for the next 30 years. What the rules are in detail in the course. Only if rules are met, you can take a trade. Speculation not an option on Apple or S&P or Amazon or Euro, no matter what you trade. What a stunning flawless puzzle market is. Doesn't matter if you beginner trader, doesn't matter your hedge fund manager. Choice is yours, what you choose to trade. Right now in the course, option trader in Kentucky, retired executive. Right now in the course, hedge fund manager from Alabama. Right now in the course, beginner trader in Switzerland, Forex trader in Barcelona, day trader in New Jersey, stock trader in Florida, Forex trader in Midwest. Every single trader, different account. Every single trader trades different instrument. You master price action. You can trade anything you choose. Just pretty please choose the instrument and time frame that's appropriate to your account. count. Never forget that. What a worthless, worthless dance. And if I would bring up the chart on Euro weekly, exact same dance remains. Look at that. Chart present in front of you for years. Euro crashed from Fibonacci reversal zone 2017. Euro reached trend inception and skyrocketed until this resistance. Look at this pain on Euro since October. Charts are twins with S&P. Very different strategy. Choice is yours. What you choose to trade. All the details in Mastery course. And if S&P is skyrocketing, it's a beautiful, beautiful thing. Just like Pound had done, despite horrific news in Britain. Shock or not. Just like IBM had done. Long-term trends focus of Mastery course. So again, we've been babysitting S&P at this key trend inception. This is where price testing you to the core of knowledge of price action. Do you understand that? And if I would bring up S&P weekly, look at that dance. My goodness. Chart present in the trading room for years. Trend inception 2014, 15, 16. Do you remember that? Trend exhaustion 2018. This trend levels can be present in the room for the next 5, 10, 20 years. Rules are met. Take a trade. And if S&P will do exact same thing right now, it's a beautiful, beautiful thing. What is the difference? Risk management and hold time. You choose to trade this. You holding trade for minutes. Boom. Not the place to short. Shock or not. 2751, ladies and gentlemen, present in front of you for many, many days. This is where you exit your short. This is expected. So here we go, traders. Market continue moving up as expected from Fibonacci reversal zone. There is absolutely not surprise. And this is what price does on any instrument, any time frame, any platform. When price comes to this area, the place to exit, not to enter the trade. So if you would like to join us, pretty please review the information on the website in detail about course, see what students trade, and do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. I always look forward to hearing from you.